Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 4 o'clock in New York. It is Monday, February 6th, 2017, and this is the Daily Report for Gold and Silver. Strong upside move in the precious metals markets, with gold really leading the way, up about 1 1/3%. Trading up almost $16 on the day. This, of course, being April futures at 1236.60. It is traded to a low today of 1221.90 and a high today of 1237.50. So as you can see, we're closing just shy or a little over $1 off of the highs on the day. Of course, we do have long positions in gold at 1203 with stops in place. We'll talk about our trade in detail as we pull up our first chart. Silver also trading higher today. Dramatic move up 1.5%, a 27-cent rise in the price of silver, settling in at $17.74. The low on the day has been $17.46 and the high $17.76. So just as in gold, we see silver prices closing very, very close to the high achieved today. So traders, before we do go over our first chart of the day, a little bit of housekeeping. I am pleased to announce a fairly major revamp of our members page and how it looks and how it works. You can see that up on the screen. If you are just subscribing to the Gold Forecast, when you go to the daily members page, this in essence is what you'll see, which is very similar to what you had before. We have our video on the left-hand side, and then just below it, of course, is the opening letter. What we have changed is our chart gallery, which used to be sitting below the letter, but as you can see, we've moved that up to a point where it's next to the video, and also you can see these little arrows right here. And by changing them, you can, of course, move through the chart gallery to look at the various charts that we used on the show that day. If you want to blow that up, of course, you simply click that, and that will allow you to go through the chart gallery for each and every chart. And for traders that have signed up for the Gold Forecast and the Trending Markets module, your members page will look something like this. It's pretty much identical, except that the video itself is the Gold Forecast with the extra information right in that video. So there's only one video to view, whether you're taking the Gold Forecast alone or the Gold Forecast along with Trending Markets. You'll have an additional section here which sometimes will contain commentary, and you will, of course, get the same chart gallery. Let's take a look at our first chart today. So traders, a pretty sizable move in gold prices today. Most noteworthy as far as I'm concerned is that we had a point in which I believe we had some minor resistance, and that was roughly at the 1220 area. On a technical basis, we could see historical data showing headwinds the last time this market reached this price point, which of course was about mid-January. Market came back down, came to about, 1183, and now has subsequently moved up. Of course, we are long at 1203, so roughly right in this area right here. We have stops in place below 1180. We will look to move those stops up later on this week. But as of today, my current analysis is going to be quite interesting, because when we look at it on a technical basis in terms of where I'm looking at resistance, and you know that we have had a basic exit strategy of around 1250 or so, but we're quickly approaching this 1242. And as I said on Friday, this is a logical point in which we could see, if the market's going to soften, we could see a trade to this price point and then maybe have a little bit of dip before returning to a rally mode. I think we're going to see dramatically higher pricing in gold really throughout the first part of this year. That is truly what I believe. However, we could see a little bit of softening there. So as I've said in our opening letter, the areas that I'm looking at currently for potential resistance, and that doesn't necessitate that we'll find it there, but right here at 1242, that's an area that we want to watch. Now, today's high was 37, and the market's currently trading at 37. So we're right up at the highs, and so we haven't challenged that price point yet to see if we get any kind of headwinds or any resistance here at 1242. For the interim, maintain your current long position, maintain your stops. As I said, we will raise them later on this week. In other news that we follow, the equities markets themselves did trade softer today, with the Dow Jones Industrial Average, although maintaining above 20,000, closed at 20,052, down about 19 points, a very, very fractional drawdown on the day, but nonetheless a lower close. Standard & Poor's, the same thing, very, very fractionally lower pricing at 2288, down about 3 points on the day. And the NASDAQ, let's go ahead and pull that up, actually traded higher today, was the only index that we follow that did trade higher at 5161, up about 6 points. Again, a fractional change, but a fractional change on the green side. Now, the U.S. dollar's really been all over the board. It was trading higher throughout the day, then traded under pressure. Our closes in essence unchanged at 99.86. And the interesting thing is, with the dramatically higher prices in precious metals, it really wasn't the dollar that added to that. Rather, earlier in the day, it was actually taking away from the gold changes. Now, in terms of major moves, the only real major move today was crude oil. Crude oil losing about almost 1.5%, 75 cents per barrel to close at 53.07. So traders, as far as the dollar goes, we are looking at fractionally lower pricing, although the market's been fractionally higher as well as fractionally lower. Of course, this is a weekly chart. Let's go ahead and convert that to a daily, although being Monday, the daily and the weekly, at least for today, is going to be the same candle. But we'll get a much more broad-based idea of what the dollar has been doing lately. We can see that it is under pressure today. It's trading off fractionally lower on the day. That after a few days of solidly higher pricing in which it tried to find some support at around 99. My sense is that we will continue to see lower pricing ahead in the U.S. dollar. We want to see if, in fact, it does trade lower, how it reacts at 99, because a break below 99, to me, would signal a major move, and that move would take us anywhere between 97 on the low side and 98 on the high side. I think we could easily see the dollar index move to that price point should it have a solid break below 99.07, which is a 38% retracement. So traders, all in all, today's upside move in gold was strong. It was, in my eyes, a major break above an area that is now going to be a support area, meaning I believe 1220 is now going to be a critical and key support area for gold prices rather than a point of resistance, which I believe it was prior to the last, call it 3 days of trading activity, in which we saw the market definitely break above that, but close right in that area. Therefore, my suggestion at this point obviously is to maintain your current long position at 1203, but also if we see a really strong base forming at 1220, that is going to be a point in which we want to move our stops up to from below, call it 1180 to below 1220. But I do want a couple of days in which we can make sure that a base is formed at this particular price point. It is quite obvious that market sentiment has been changing. It has been favoring safe haven investments such as gold. We have seen dramatic price increases really since we hit these lows back on December 15th. And as we've talked about, we had our first major $100 rally going from 1120 to 1220. We then had the market correct to about 1180. And now we are in rally mode. As I said, I believe that we could see this market move anywhere between, on the high side, 1281, and then on the low side, 1242. Of course, 1242, if we do have a dip, would be a dip within this impulse wave, meaning we would see the market come down, maybe correct a little bit, and then move up, because a completed wave 3 has to be or cannot be the shortest of any of the impulse waves. One is an impulse wave of $100, and therefore I'm expecting a rally basically of $100 in gold on this particular run. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.